GETCRACK. Wake up, motherfucker.
Out early. That confused everyone. The CEO had to address it on the investor call. What did he say?
Yeah, so the results were scheduled for today, but the company published them early yesterday evening by mistake. They didn't say much, but they kind of blamed it on a technical error in a statement yesterday. And today, the CEO, Christophe Fouquet, apologized in an analyst call about the results. He said this was very unfortunate. They booked less than half of the orders that analysts estimated in the third quarter. And they also cut guidance for next year. So the results were an unpleasant surprise for analysts. And the market reaction was amplified by the company releasing the results a day earlier than scheduled.
Look, they're still sinking, even though the CEO has now spoken out. How did he explain the cut to guidance, the bookings dramatically under where analysts thought they would be?
So yeah, any weakness in ASML orders, as Ed mentioned earlier, often kind of signals struggles for the wider chip sector. They're the market leader for lithography machines in the world, so we can call it a bit of a chip bellwether. So ASML is citing a few delays in chip plant constructions around the world as an explanation of why the results were so bad. They also see weakening growth in China for their older machines due to a combination of softening demand and possibility of future export controls from Washington. Also keep in mind that Intel is, their biggest customer in the U.S. And it's cutting expenses in a restructuring push. So that's not helping the sentiment either. And then you have, delayed factories of Intel in Germany and Poland, while memory chip makers such as Samsung and SK Hynix are also being careful with their spending. So all of these spending cuts are affecting demand for ASML's chip-making machines.
Okay, if you're just joining us here on Bloomberg Technology, the world's most important maker of the machines that make chips had really ugly earnings and an ugly guidance. And what Chan was just explaining is kind of the backstory of earnings that came out early and were a surprise. You're looking at a two-day chart, 16% decline in Amsterdam yesterday, 5% decline today. And that anxiety, Caroline, was around the world. Asian session, European session, and we've chilled out a bit in the US session. Yeah. What we're worried about, Chan, is the investment cycle. What did ASML tell us about their own investment plans?
So, the big miss is obviously a signal that the chip industry's weakness is set to continue. They said well into 2025. And they did say that ASML will slow its short-term investment plans to match the market in today's call. So basically we can also say that it's important to mention that the chip industry is experiencing some uneven times, right? Like in areas such as artificial intelligence accelerators, companies like NVIDIA can't keep up with the demand. But in other sectors, including automotive and industrial, it's a prolonged slump with customers cutting back orders because they have too much inventory.
This Halloween, it's time to turn up the heat and bring those spooky vibes. The John Galt YouTube channel is hosting the ultimate sexy Halloween costume contest, and you could win over $300 in cash. That's right, first place takes home the biggest prize. But don't worry, second and third place will still score big. It's easy to enter. Dress to impress, flaunt your most creative, sexy, or daring costume, and show up to the live stream during the evening of October 31st, which is a Thursday. Come on over on Halloween and flaunt your very best and enter your chance to win the grand prize. Let your imagination run wild. You can be a witch, a vampire, a ghost, a nurse, a cheerleader, anything goes. The more unique and bold, the better. Winners will be crowned based on creativity, style, and those spooky Halloween vibes. The John Galt community will decide who takes home the glory. So what are you waiting for? Get your costumes ready now and come on over to win that prize on the John Galt YouTube channel. Hit that subscribe button, follow the contest rules, and you could be walking away with cash and bragging rights. This Halloween is not just about tricks and treats, it's about winning big on the YouTube channel, The Urban Landlord. It's the only place doing this. Let's have some fun. Let's have
MC, wow, the timing, the accidental timing perhaps of ASML, but it is important to think about how quickly TSMC comes, because it's the continuation of the story, right? The investment cycle into AI, frankly, and whether we continue to see investment in chip equipment, making equipment, and the chips themselves. Joanne.
Yeah, Ed, clearly TSMC has already released monthly numbers, so we have a good indication that their results are going to be solid and led by AI. The ASML news is more about, I think, China, particularly the pull forward in China for some of that equipment ahead of increasingly severe regulations against ASML shipping there. So 47% of ASML's business comes out of China, and that's going to have a big factor. The fact that ASML did acknowledge that AI continues to be strong, but elsewhere things are weaker, could reflect a number of things, starting with Intel and its plans to delay some of its and cancel some of its overseas projects, for example.
Let's just dig into how sad, as the CEO of ASML called it, the rest of the market is without AI.
Yeah, I mean, we've heard from plenty of the analog chip makers like Texas Instruments, for example, that autos is weakening and they don't know. They said, look, we don't know how soft this is going to become. It hasn't gotten severe yet, at least the last time we heard from them. But on the other hand, we also have heard that inventories have cleared in other end markets for semiconductors like industrials, and that we're starting to see a pickup there. So it's really hard to read ASML's comments about orders into the broader sort of away from the leading edge chip businesses like analog or microcontrollers. And that really is a sign, those companies, analog and microcontrollers, really tell us more about the broader economy. And we know the US economy is doing well. We know we're seeing recovery in industrial. So it's sort of hard to tell what ASML means, how much of it is China? How much of it is Intel pushing out its plans? So it's actually not as straightforward to read, I think, as some people think it is.
Let's give the nuance, therefore, because you're so good at doing that, Joanne, because this comes in the context of the breaking news that came on Monday that maybe we will see yet more and more, limitations on exports from the US and around the world to China. NVIDIA chips, for example. Why was NVIDIA so sold off yesterday if it's not around AI? How much of an importance is China-US to some of these valuations?
Yeah, NVIDIA shouldn't really have sold off on the ASML news yesterday, particularly because ASML said this has nothing to do with AI.
Right.
So I think what you're seeing is, NVIDIA is a big component of many ETFs. And so, when you sell out of those ETFs, the money flows out, everything in them gets sold. So I think that was a big
Yeah, what's up, guys? No, everything was shut down because the software crapped out. Yeah, because usually before I do a stream, I gotta reboot my computer to clear out all the memory. Otherwise, if I leave it on, yeah, this is what happens probably sometimes. It's just like the memory just sucks over, takes over the whole thing, and then like all the drivers stop working. So basically, any microphone driver will stop working. So no, I don't have a smartphone, J Rillo. Anyway, that's done. No, I have to use my computer anyhow. You're not going to use a cell phone to do a presentation like this. So, yeah, because I can't do my charting and all that stuff and then you're going to get a lag with one audio. And no. See, this is why I don't know what's going on with StreamYards. We got to get off the plantation. If we're paying this much money for it to just destroy all my GPU, CPU, and memory resources, So I had to replace my battery because every time it drains out my battery, it went through so many cycles and overheated everything that I had to replace it. So yeah, I'm looking into a new laptop. Probably gonna have to use a desktop. I mean, that's what those pro streamers will have to do if you do like advanced charting and then putting everything up. But we'll see. It's down the road. Anyhow, let's get back to the video.
TSMC, wow.
And cancel some of its. I mean, we've heard from plenty of the analog chip makers like at least the last. Also have heard that inventories have cleared in other end markets for semiconductors like industrials, and that we're starting to see a pickup there. So it's really hard to read ASML's comments about orders into the broader sort of away from the leading edge chip businesses like analog or microcontrollers. And that really is a sign. Those companies, analog and microcontrollers, really tell us more about the broader economy. And we know the US economy is doing well. We know we're seeing recovery in industrial. So it's sort of hard to tell what ASML means, how much of it is China. How much of it is Intel pushing out its plans? So it's actually not as straightforward to read, I think, as some people think it is.
Let's give the nuance, therefore, because you're so good at doing that, Joanne, because this comes in the context of the breaking news that came on Monday that maybe we will see yet more and more, limitations on exports from the US and around the world to China. NVIDIA chips, for example. Why was NVIDIA so sold off yesterday if it's not around AI? How much of an importance is China-US to some of these valuations?
Yeah, NVIDIA shouldn't really have sold off on the ASML news yesterday, particularly because ASML said this has nothing to do with AI.
Right.
So I think what you're seeing is, NVIDIA is a big component of many ETFs. And so, when you sell out of those ETFs, the money flows out, everything in them gets sold. So I think that was a big driver for NVIDIA. And then also, you could see some folks saying, let me get a little bit less exposure to the semiconductor space overall, given how much it's rallied. That could just have been a decision made on diversification lines. But I think it's probably the ETFs that drove most of that.
Joanne, remind us which of these names you like and hold, which you don't, and why.
So that's why I paused it around here. I was going to tell you guys that you heard that right with the ETFs. That's really what drives things, and everything is coupled together. And you got to understand. So even now, when one stock sneezes, like ASML is pretty obscure stock, but when one stock sneezes and you hit the biggest sector components, in an ETF, all of them starts crashing together. So you have a systemic risk. And I actually remember Michael Burry. So Michael Burry of The Big Short, he warned about this type of effect happening sometime in the future where everything is so concentrated in ETFs because people are so lazy now. They don't invest in individual stocks anymore. They just buy the ETF or everything's wrapped around some ETFs. When you have a shock, we don't even have a financial crisis yet, but you see that, okay, a Dutch company, an obscure Dutch company, like sneezes. And then all of a sudden, okay, it affects the semiconductors. Semiconductors is a large chunk of the NASDAQ because of AI. In the past 1.5 years, it just became a heavily concentrated part of the index. And that in turn affects the S&P 500. So one stock dropping 16%, which is not a big component of the overall S&P 500, dropped the S&P 500 by 0.5%. Now, if it was like something else bigger, guess what? You get bigger drops. And then if you had a bigger effect in the economy, everything would just crash violently, a lot more violently than we ever seen before. So that's something to keep in mind. I'm not going to say like, oh yeah, something's going to go around the corner, but it's going to happen around the corner. But you should be aware that concentration risk is a big thing. It's something to watch for. I got to go find that article again. He wrote it about maybe 4 years ago, 5, maybe more. I think it was before COVID, so at least 6 years. He was warning something about that. So anyway, I continue on the video.
Yeah, so we're not involved in ASML, nor do we like Intel here because of its significant challenges. We do like NVIDIA. We continue to like a number of players in the AI space, including Broadcom. So, overall, I think that the economically exposed companies like Texas Instruments, we own that for clients. I own it myself. I think is a good place to be given how strong the U.S. economy is and how much of a recovery we are seeing in industrials. Intel, just faces huge challenges to catch up in manufacturing, and it just doesn't have the expertise to do foundry work. It's a big challenge for them to build a library that it can then build other types of chips for. So, the Qualcomm deal, if it goes through, we suspect will be more oriented towards Qualcomm trying to acquire the design side. And that could give Intel a massive cash infusion with which to save the manufacturing side and really make the investments that are necessary. But we think that's such a long way off and so
that's another funny thing about StreamYards. Like it seems to pause just about like a few seconds before the video actually ends.
certain that we don't think Intel is a place to be right
Something
now.
weird's going on. Yeah, that's for sure. That's weird. I don't know. It didn't happen like before, like last week, but seems to be happening now. Could be a bug. Not sure if that's anything. Yeah, Portia, I can share links to these videos, but yeah, I download them. That's why. So then I got to go find those links again. Yeah. Anyway, let me see. Let me see if I can find these things again. I guess I can just give you the title, but yeah, that's more annoying. But here's the next video I got. Today, very good day. TSMC released earnings overnight. So around 11 o'clock my time. So maybe 2 a.m. Eastern. And guess what? We are doing fine now.
Out to you from these numbers.
I think it's that margin, Tom. It's incredibly high. You think about where analysts had seen this going into the numbers, and you were looking at a range here of between 53.5 to 55.5. So at 57.8, you've beat even the highest of estimates by quite a wide margin. And you think about where TSMC sees their longer term target, that's at 53%. So again, it's another signal that TSMC is really robust in that higher end, more advanced technology space, AI chips. That's where it's really dominating the market here. And that's what's really standing out so far. Again, you could have expected, of course, really strong net income figures. We already had that outperformance coming through over those monthly sales figures. But again, just to reiterate, that gross margin, 57.8, it's impressively high.
Yeah, it is indeed, isn't it? And the stock is up 78% year to date. There will be maybe further upside today on the back of these results. And it's a reminder, Annabelle, as you well know, that we have to think about this chip sector and distinguish between that demand, as you say, for those AI accelerators, the GPUs produced by like this of NVIDIA, and that slumping demand for the chips that kind of go into electric vehicles. There's some view as well that maybe the fortunes or the misfortunes of ASML is not necessarily a bad thing for TSMC. TSMC are not having to spend on those EUVs maybe at the rate that they would have, and they're able to use the EUVs, the DUVs they already have, the lithography machines, to produce chips of greater efficiency. Talk to us about what you're going to be listening for on the earnings call and how to think about some of these factors.
Yeah, so there's a couple of different things we want to listen out for. So it's kicking off in about 25 minutes from now at the top of the hour. The first is what they signal around 2nm production. This is their next generation of chips, and we're expecting those to start being made toward the end of next year, perhaps. We'll watch for any sort of guidance around that. Adjacent to it is advanced packaging technology, and I won't get too much into the details of it here, but suffice to say, advanced packaging technology is taking on an even greater prominence in semiconductor production because it integrates multiple components into compact designs, and that's really critical. TSMC has a proprietary technology called CoWoS, chip on wafer on substrate, and what they signal around the expansion of these facilities will be another really critical thing to watch out for. Guidance, of course, really important. Are they going to lift the guidance for 2024? What will they also say about 2025? Power price hikes, another really critical area because Taiwan is pushing through higher power prices for its industrial giants. Our Bloomberg intelligence team is saying that could start to eat into margins into next year. And lastly, just anything they signal around geopolitical concerns, because of course we're just a few weeks out from the US election. Taiwan or TSMC is pushing through with making production facilities in the US, Germany and Japan. They do need to start to move some of their technology outside of the island. But what they say there, of course, will be another thing to watch out for.
Alrighty, so we got something good. Let's put up the charts today, and let's see where the NASDAQ is. I mean, it opened up and tried to fill up that gap. It did that. So I'm looking at SOXX, the semiconductor ETF right now. 3-minute chart. Let's look at a 65-minute chart, so about an hour chart. You see that it opened up, went right into that two pink lines, that resistance area, and now it's dropping back. So, and it's still within that rectangle I drew way back when. So this rectangle is so important, set by March. So it still has a big, massive effect. The battle occurs here. So we're in the midway point. And tonight we will have Netflix earnings. This will be the first big one. First big consumer discretionary technology, NASDAQ component stock that will report. I'm not sure where it's going to go. Now, if tomorrow ends up to be a good day and we go right back up to the top of this rectangle, I don't know if semiconductors will do anything because Netflix is not technically a direct influence on it, has a direct influence on semiconductors, but it is a technology stock. If you see consumer demand growing, you will assume that Netflix will continue purchasing more chips for their servers. And we don't have anything until next week. Next week, I think the only major NASDAQ stock is Tesla, which reports, I guess, on Wednesday. I'll have to look this up now for you guys. I think it's Wednesday. But the major ones, Apple, Microsoft, Google, all those major ones will report around Halloween. So trick or treat. Okay, guys. So if we get a bump up from Netflix to go into the early next week, then yeah, we'll be fine. We'll be fine for a little more while, but a little more. Yeah, next Wednesday, I was right. After the close. So it already got hit because of the robot thing. Oh yeah, the robot thing. Yeah, let's do some Tesla news. Why not?
Most humanoid robots at the Robotaxi event were teleoperated by Tesla staff. There was human assistance. And the way sources describe it to me is any interaction with guests, like conversations, pouring drinks, games of rock, paper, scissors, were done by teleoperation. Walking around or dancing
They were fake.
by Optimus was more autonomous. And here's the backstory. About 3 weeks before the event, Elon Musk decided he wanted the robots there. So he went to the Optimus team and told them so, and they had a very short window to make it happen. They couldn't make the advances on software when it came to computer vision and locomotion to make that a reality. Teleoperation was their only choice. They had plenty of Optimus robot units. They didn't need to necessarily build more. They just couldn't crack the software. And it's important, right? Because Musk did not state that there was teleoperation. The Tesla IR team did not say there was human assistance. Many suspected there was, right? Many guests asked and were told by engineers or the robots themselves that there was an element of human assistance. But it was an event that was supposed to be about robotaxi. And for many, Optimus was the main takeaway. Musk said that the future is much nearer in terms of having a personal robot that could cost as little as $20,000. Now there are questions about actually how capable Optimus is and the amount of progress they have made and needs to be made to meet that reality.
Oh man, well, there you go, guys. There you go. It was fake. It was phony. All right, Portia, I put this link in the chat. So that was that video. Anyhow, guys, let's go back to the charts. Let's see what we got today. Anything else? Let's see where Netflix is at. Netflix. So reports today, it dropped a bit. So it's at the high right now. It's right, yeah. It's right back at the 2021 high. Whew. Man, that's not a good place to be betting on earnings. Like those results better be good. And nowadays, Netflix doesn't report as much of the internal metrics like they used to. So maybe they could hide things and massage numbers to not, if there was a drop off in subscribers or whatever, they can wave it away somehow. Then they'll probably try to do that. Yeah, pretty wild looking chart here. Yes, definitely a wild looking chart. Let's see here. So we got our major. Probably 2015 was a major one here. And then we had, I guess, this jump up in 2018 before going sideways for a bit. Yeah. This is a crucial moment. Oh, definitely it's a crucial moment here. Okay, let's look back at QQQ. Yeah, we're also at a crucial moment for the NASDAQ. Yeah, we're almost back at the high in July 10th. Yeah, we're still, man, it's a struggle. You need that Netflix. Yeah, so people are already selling off before the close right now. So the close will be in an hour, 30 minutes. So you had that initial pop here on TSMC, but all you did was cover up everything that got sold off because of ASML's leak. So people that were buying, like me, yeah, I was buying long positions here just for a quick trade. Like at the open, you just dump them. That's it. You win. If you wanted a quick scalp, that was it, because it made sense to do that. A CKJ3 probably already did it. So like here, you see this. So once you went just below this rectangle, which is set by the purple up and down and inside this yellowish tinted area. Yeah, if it goes below that, why not? Give it a shot, because TSMC had to give some really bad earnings for it to just continue downwards here. Man, yeah, I don't know what semiconductor stock is coming up next week. They'll probably Texas Instruments, and Texas Instruments is usually bad. I thought Intel would report earlier, but I don't think they are. It's also around. Man, all of them just wanted to push it all the way right into Halloween. Like, this is, oh my God. That means the last week of October is just going to be intense volatility. I don't know what's going on, because usually Intel will report earlier, a week before the rest of the guys, but they scheduled it right there too. So you got Apple, Intel, all of them. When's Amazon then? If Amazon, is Amazon at least earlier? Okay, thank God. All right, Amazon will at least report on Thursday next week, so we'll at least get some early indications. But so that means Tesla, Amazon, the two biggest ones, will report first next week, Wednesday, Thursday, respectively, and then the rest of the guys were just waiting around Halloween just to report their crap. It's just, oh man. And then we got elections the week after, and Powell talking a couple days after elections. So yeah, the next coming days, get ready. That's why I've been doing all these streams, just pumping out all the information, because by the time we get closer and closer to November, it's just going to be go time. We're just going to be looking at stocks right away and just be like, okay, is this a good time to buy? Is this a good time to buy? Is whatever. And as I told you last time we met 2 days ago, or 1 day ago, if it was like, depending on your time zone, we got here. We finally made it. So this is the Russell 2000 ETF, okay? IWM. When I see these small caps doing this, I'm getting very optimistic of how strong the market can go into the first quarter of next year. And couple that with Bitcoin. Bitcoin is usually a good leading indicator of how happy and how liquid things are. If people got money to spare money to put into Bitcoin like this. Now, I'm not going to say what's going to happen, like it's just going to shoot up right from here. No, what I think is going to happen is probably we'll make one attempt to go to about $72,000, which was right when March. This is when I was starting to sell, like around here, March to April, because that was the last time we had news on Bitcoin, and I knew the rest of the year would be like going nowhere. So now we got this, because this area was a battle zone back in 2021, first quarter. So now, where are we going to go? That's the question everyone's going to ask. And I have a video for this. Let me get it. Let me get it for you guys.
It's definitely by the character better, more bullish, so it might change the way how reaction unfolds. But we said that we're expecting reactions to be smaller, and every reaction, like if here from, let's say, 0 to 1 to 2 to 3 to 4, we are increasing reactions. Then we are starting to decrease to 5, now to 6, maybe 7 is less a degree. I still would prefer to see more volatility decrease. I want to see the discouragement by all of the participants. That would be interesting.
All right, so I'm going to find another video that I presented last week. So let's see what happens. We want to see volatility decrease, okay? And this was the video I showed last week.
This is a complex triggering range that suggests 3 stages. Stage number 1, which is the reaccumulations phase, still predominantly bullish structure, but that demand is weakening, which leads us to the second stage. That stage of the structure is going to be associated with the increased volatility. And then we are going into the third final stage, and that is of the reaccumulation. Here we usually would have an aggressive rally up into the highs, and then we're going to have lowering of volatility.
All right, you heard that. So that was his prediction last time. And now we see what's the result this time. So we're still looking at that 72,000 area. and then we see a decrease in volatility. That's what I think is going to happen. We're going to push up into Halloween. We're going to trap some people. Then Bitcoin's going to come back down, but test at a higher range, right? At a higher point in that little blue square that I drew. Let me put back my screen. Cyan square right here, right? We're going to go above it a bit, come back down. We might get to the top of that blue square, blue rectangle, and, test these areas again, but we won't go back down further, right? We won't want to see that. And for that point, it's go time. It's go time. So, and that means for all cryptos. Well, maybe not the alt cryptos at first. Some of them might follow, right? But for the main portion, it's usually Bitcoin leads, then Bitcoin pauses. Then you see all the other trash start using that the Bitcoin gains to do all the other garbage that's around, right? The Shiba Inu and the Dogecoin and all that other stuff. But, we'll see. Things might not follow as planned. But for me, I usually just do the miners. Yes, these miners are what I like. You play them by cycle. So last time I was in them was from here, this October low. And then you get out into January, February. March was the last time to get out. You could have played this stuff, but it's pretty volatile. I mean, I don't personally like it, but you can. And if you're doing options, definitely, yeah, you would be very aggressive at the start of the move up. And this works by cycles, okay? You have to understand. I think we covered a little bit about cycles maybe 2 weeks ago about the Bitcoin cycle. So we are in a good cycle right now, starting sometime in November. So after we do the first October one, we'll do late November, early December, and we should see something going into Christmas. That should be a big pump. And the two I like to usually play is Mara, MARA, the other one I showed, and CLSK. Clean Spark is the other one. Clean Spark looks like it already wants to rise. We're already back at this previous level of January. You see, this is not as smooth as Mara, but I usually just do these two. One, Mara is more popular in terms of options. So if you're an options trader, I'm not, you can try Mara. The other one is MSTR, which is Michael Saylor's company, but this one's already hit the high. It's kind of over enthusiastic. It outperformed early. It's moving back up here, but in any case, all these types of companies require the NASDAQ to be going up too. So the best scenario is when the NASDAQ is moving up alongside with Bitcoin. When they move up together, that's when you get the peak performance, okay, out of those type of stocks. So let me see. Let me see if I can do Bitcoin here. Let me do a clean chart here with Coinbase. Okay, you got this Coinbase chart, same thing. And then I add in like the QQQ, I can add that. You see, when they go up together at this point between October up until March, and after that, NASDAQ stopped moving up, right? Bitcoin still continued. But after that point, you got out. You pretty much get out. The main move was already done. So when you align them, and you can tell when they align together, that's the best time. So last time this was really sweet was during COVID. So Mara was like about below maybe 3 pennies. I think at that time, maybe it wasn't 3 pennies. It was like 30 cents. I think it was 30 cents. I don't think it was that cheap, 3 pennies. But yeah, you got in. You knew NASDAQ was going to get pumped. So this portion here, same thing between August all the way to February. This is it. This was it. You're done. You're done. So let me look at Mara's chart at that time. 2020. So yeah. So this thing only started to find a bottom September. Started really moving in November into January, and the end was February. That was it. That was it. Yeah. So, and if you got in at that September low, and that was like $1.60. If you were the really, really risky bottom feeder, yes, it was about 40 cents. So yes, 35 was the absolute low during the March COVID low. I don't know if you, yeah, you could have bought a crap load of options at that point and then rode it all the way up to like 27 or something. 40 cents to 27. Yeah. I mean, I don't know. I don't know how options pricing was around that time. That must have been crazy, crazy. But just in terms of share price, that was like 7,600% move. Okay, that was a 7,600% move just on share price if you just bought it at the COVID low. Yeah. Now, if you did Bitcoin, like just by itself, Bitcoin, no, you could do options on Bitcoin too. There's futures there. You could leverage. So, but let's just say you just did Bitcoin straight. Then that was just a 1,273% move. See? I mean, I don't do options. I'm not going to do the futures on Bitcoin. That's too crazy for me. So if I want leverage, I just buy shares of miners. So miners can outperform the same move in Bitcoin as long as it moves up with the NASDAQ. So there's high momentum in both of those things. You can see it. Now, here's another thing you got to look at. It's not only just the NASDAQ, because NASDAQ has large caps, okay? It's pretty much all on the QQQ is all actually all large caps. It's the NASDAQ 100. There's a NASDAQ composite index, which is slightly different. Most people don't tell you about the distinction. So let me see. No. I didn't want to do that. Let me see. So yeah, let me add the XBI. So the XBI is the worst of the NASDAQ, the trashiest of the NASDAQ composite. So QQQ is the strongest of the NASDAQ composite. XBI, the biotech, is the trashiest. And I talked about XBI like last time and then the time before that. So you'll see it if you go back to those streams. But as you can see in the green line, you see it made a extreme peak in February 2021 and just dropped all the way. It just started out underperforming the whole NASDAQ 100 early. Okay. So when you see this extreme, when the small caps of the NASDAQ, the garbage, dumpster, pharmaceutical, biotech stocks go up, that's a real good sign. Man. I gotta buy Mara, CLSK, stuff like that, because Bitcoin miners are in the same group. Because if you're a fundamental analyst and you just look at those companies, so if someone's an investor, right, they look at those companies, Morris and CLSK, they cannot make any money until Bitcoin hits new highs, because every 4 years, right, they have a halving. So they make less money on Bitcoin. So in order to compensate, they need Bitcoin to go even higher. And at the same time, they also need to make sure electricity prices don't go up, right? So you need energy prices to be low. So you have all the same problems as gold and silver miners, but more extreme, because they have crazy debt structures where they really have to, if they can't get new bonds at low interest rates, what they're going to do? They're just going to issue more stock. And every time they issue stock, it just crashes the company. So a lot of like investors will not be attracted to those type of companies unless there's good conditions. So they have to think, one, interest rates are going down, so they can try to get more debt with loans without issuing more stock. I mean, that's a theory, right? That's just the framework they're going by. And then the other thing, they got to see Bitcoin go up. So there's a lot of liquidity in the market for people to take more speculative plays. And then the other thing too is they got to think, okay, electricity prices, is it going to stay high or low? Right now, electricity prices, it's a problem. It's going to be a problem. So let me play this video. I think this video will be very relevant to what we have now, because we are worried about electricity. And I talked about electricity a lot, along with water for data centers. So what is going on with Google and electricity? Also Amazon too, Amazon as well, Amazon.
The best starting point, because it's well documented, the terms of the deal, SMRs and what they are, is whether it meaningfully changes the trajectory of meeting your power needs, but also your targets for climate as well.
Well, the world needs more carbon-free energy, and this agreement that we signed with Kairos is an important milestone in what's been a 15-year journey at Google to make the transition to clean energy. It's our first nuclear energy deal, and we feel that nuclear is a very important technology for going carbon-free for offices, data centers, communities where we operate, because it's an always-on carbon-free energy resource.
I'm very interested in the technology. You know I am. But I'm also interested in the economics and the math. Are you able to say, even if it's an estimate, kind of where you see the dollar per megawatt hour being by 2030, 2035, when these come online?
Well, I can't talk about the specifics of this deal, but what's interesting about it is we didn't do a deal for just one reactor. It's actually for a series of reactors, what we call an order book. And that repeatability helps to drive down costs and helps to take the technology to scale faster.
Your focus is eliminating carbon emissions by 2030. Does this get you there, Michael?
That's right, Caroline. We have a goal as a company to be 24/7 carbon-free in everywhere we operate, in every location, every hour of the day. And it's a huge challenge. We've actually been in this space for 15 years in terms of doing wind and solar, large deals. We're one of the largest corporate purchasers of wind and solar on the planet. We signed over 100 deals. But we know that to get to carbon-free 24 hours a day, we're going to need more technologies than just wind and solar. The wind doesn't blow all the time, the sun doesn't shine all the time. And what's great about technologies like advanced nuclear is that they provide a more always-on resource. So it's a very big part of our path to 24/7 carbon-free energy.
But it takes time. And right now, AI, generative AI, the training of it is in the here and now. Do you have the energy infrastructure necessary to satisfy that demand?
Yes, we do, and it's why we're making big bets like we are on nuclear, but we're also still betting big on wind and solar and storage. We signed over 4 gigawatts of deals just last year, the most we've ever signed in a single year. And now we're inking new agreements with utilities to develop a portfolio of technologies that can meet our 24/7 carbon-free needs. So we're both betting short-term and long-term.
I know you won't give me a dollar per megawatt hour figure, but you do expect the SMRs to be competitive and of value versus solar and wind and the other technologies you outlined.
Absolutely, Ed. We wouldn't do this if it didn't make sense for our business. And, you know, one of the things that I think we ought to really think about in how we value these approaches is the always-on nature of nuclear technology.
Hours.
And it delivers a lot of value, and you can put it anywhere. And so that, again, is very good for the business.
But can I just jump in really quick and ask you, your job is really interesting because you are responsible for the energy needs. If you're not calculating the cost per megawatt hour, do you have a clear figure in your head about the energy need over a 5-year or 10-year time horizon?
Yeah. Well, we've been doing this for, like I said, 15 years. We have a good sense of how our demand is going to grow. We have a good sense of the portfolio of resources that we need. And we're making decisions that make sense for the business and make sense for our growth as a company. So we feel we're on a good path.
Look, it's busy out there in nuclear. Never have we talked about it more. And the Amazon deal, for example. Look, these are companies that we've not really heard of. Kairos Power, the private X Energy. Are there enough startups, enough companies building what you need right now to partner with?
You know, it reminds me of the early days of wind and solar. We were one of the pioneers in signing corporate PPA agreements to buy these technologies. And there were not a lot of players in the early days of those as well. But now with this new set of technologies that we're going to need to get to 24/7 carbon-free energy, it's not just nuclear, it's enhanced geothermal, it's long-duration storage. And so it's great to see others getting in the game. The more the merrier. I'd like to see 100 more companies doing nuclear deals from what we've seen this week.
We're running out of time, but so you will look at geothermal. And can you give us a proportion of what you see the contribution of nuclear, geothermal and solar?
Yeah, actually, geothermal was one of the first advanced energy deals that we did. We signed a deal in 2021 to do a project in Nevada. It's now scaled to a deal that's 25 times bigger than that original project. So we've got experience in dealing with these new technologies, and we're super excited about the potential for nuclear.
All right, so let's look at a chart. Right here is a uranium ETF, URNM, and I've been talking about it for quite a while, on and off. All Seeing Guy is in one of these companies in this ETF, probably the largest component of this ETF, which has made a new high, CCJ Cameco Corporation. Okay. Now, I would say, if you look at this ETF here, we've been in a range for quite a while. I mean, I'm kind of loosely saying it's a range. I mean, I don't know. I guess this is a Wyckofian looking thing. It's kind of like a creek pattern here. If you did your homework, you know, this is a creek pattern. You try to make a new high, but then you got this. This was kind of deep, this reaction here. But hey, we made it through. Now we're back up. At least we didn't really penetrate too much into the 50% of this rectangle. So I would say, okay, it's looking like a structure. Now I got to do my little point and figure thing to figure out, like, based on this rectangle area, what's the potential next price for URNM into next year? If we believe that this thing really is turning around here, okay, that's the question. Now, if you remember last time, I was talking about stage analysis. So let me get that. Let me refresh your memories. Stage analysis. So I got the screener here, okay? I got the screener. Now I sort by stage 2. I'm essentially looking for an early growth in stage 2 with a very strong stage 1 component. So essentially a lot of the stocks should look very strong in stage 1, but just early in the works of going into stage 2. And you see here uranium, 55% of the stocks are in stage 1, 33% stage 2. So we are seeing the early settings of a big uptrend. We're just starting it. Doesn't guarantee it's going to happen, but we have it. Now the other one was lithium, I believe. Yeah, lithium somewhere down here. I believe I saw lithium. Oh yeah, lithium, 22%, 22%. Yeah. Lithium, another one. Potential. There's potential. Just gotta get a little stronger on that stage 1, because when we were looking at it yesterday, it looked a little better, but today I think a lot of lithium stocks have pulled back, so now it doesn't look so good, right? So now it's back at 22%. So these things fluctuate. You know, it could be that uranium will just pull back again. It's not ready yet, and we'll see it go below 50%, back to 40 or whatever. But yeah, pay attention. Pay attention. Hong Kong stocks, Chinese stocks, yes, same situation. We're about to break out. And the Hang Seng was something that I brought up as a really, really great example of something that looks like a Wyckoff pattern. All right. So let me pull that up again for you guys. You see that? Man. Almost there. Almost there. So I'm still shorting Chinese stocks from up here, FYI. But, you know, I wouldn't get into it now because China's going to report GDP numbers tonight. I'm going to hold my shorts in case, like, I get one more leg down, then I'm going to sell it. But, I mean, it's possible that it'll just recover and that's it, over. I'm not going to get any more profit from that trade. So from here on out, I'm just watching for where I want to get in on Chinese stocks, because this eventually into next year will pop. So this is what we're going to watch for next year, because once we pop out, that's the real move. So this stuff here is just like the gambling trading phase and the investor phase, when the investor, because the real investor has probably been buying here and here. October 2022 at this low, 2024 started buying more in August. They probably took some profits up here and now are waiting for the final ride. And once we get there, pop, we're going to go up. And I have to do another point and figure chart for this one and see what's the potential height of the Hang Seng will be. And if you are bullish on the Hang Seng, you can use leverage ETF yin, YINN, bullish. Okay. So maybe it will drop to below 30. You can start accumulating for next year. But that's if it's a smooth ride. Now, these leverage ETFs, they're not cool when it's not a smooth ride. So I'm going to show you another one. Gold is another one I like to go. So if you're just playing the straight ETF, gold ETF, you just do GDX. Okay? And right here we're right back at the resistance. Now, the problem is if you use the leverage one, it's very choppy. And this is where it hurts you, because you see this chart it's underperforms the actual, because here it's right back at the top. But if you look at the GDXU, the leverage one, the 3X, you see it's not back at that top, because it's decaying, because it has to go every day. It has to match the percentage, right? So let's say if a stock moves up 1% every day, up 1%, 1%, 1%, GDXU will go up 3%, 3%, 3% every day. But if we're just bouncing up and down, like, okay, I'm up 5% one day, then I'm down 4%, the next day I'm down 2%, the next day I'm up 4%. Like, if you're doing stuff like that, it's not going to line up, okay? Because when I'm moving up and down 1%, that's kind of okay. But when you're going up and down 10% over a week's time, let's say, then you go down 10%, you got to go up 12% to get back to the same price you were 10%. And since this leverage ETF only goes by percentage, like, it doesn't compensate for that whipsaw motion, that seesaw action there. So every time you have a stock that has a seesaw motion, you don't want to be using these leverage ETFs for long periods of time. I really, and gold is such a hard thing to time. And that's why, it's the same problem with oil. So that's why, like, oil is like, you don't want to be in it too long. So that's why you have this problem here. So right now, the natural gas is right in this red area. It could still go up, but I already got out of it like last week, because once I saw it couldn't do a strong close on Friday, I'm like, okay, I got to give up on this trade, because I bought oil mostly in the 8s up to 9s, and I did a little bit in the 10s, so I had to get out once it went into this 9 area. It's just like, nah, I can't hold this, because you can only get a good trade on oil if you got this kind of move here, right? Where it's just like mostly going up every day. Because if you start doing this jagged up and down motion, it's not going to work. And the worst thing about using futures, because natural gas runs on futures, so oil has to roll over. So actually the contracts that oil is following right now is January contracts, so 2 months over. So every time it rolls over, you get that decay too, because you have to buy a futures contract at a higher price than the present contract, because nobody wants to buy commodities when the expiration is coming soon. So that's the duration thing. So John was talking about duration, he was mentioning duration several times in the past couple streams, probably 3, 4, 5 streams, 6 streams ago. He's talking about duration. What's duration? And when you're dealing with futures on a long-term scale, you're not trading like scalping a day trade. You got to worry about that. So that's really makes futures trading a lot more complicated when you have to use it for long-term investment, because they're not like shares. There's no duration on the shares per se. I have to say that with a caveat, because you're actually are buying some kind of duration. Because when I told you about XBI, right, the biotech ETF, you are playing duration. You are basically putting a bet that bonds are going to be cheap. So loans are cheap. So this is the same way John would try to describe like people paying rent for his houses and stuff like that. Like if there's a dry up in liquidity, so there's no payday loan places anymore, there's no pawn shops. These people are getting desperate to get a house, but they can't have access to liquidity. Then what's going to happen? John can jack up his prices, because now there's a duration that's not there anymore. Because before you could get loans and pay it off slowly, or then if you had to do payday loans, it's because like, well, at least you got a month. I mean, it's not a long duration loan. Like if you went to Chase and talked to a banker and said, hey, I want to open a loan at probably prime is around, man, it's gone up, hasn't it? Probably can get like a 9% loan. I don't know. Even maybe if you got really good credit, you could get 5, maybe short term, $10,000 from Chase. I don't know if you can. I hate getting loans, so I'm not a loan guy. You're gonna have to talk to someone else about this. I hate the idea of borrowing money. So anyhow, this is what you gotta think about. So when you're buying something like XBI, it's duration. Actually, I do have a video on this. Someone else can explain this much better than I. I think I'll show it in the next stream I'm gonna do later today overnight. So then it will be there for you guys to watch in the morning. So I'll play that longer video. It's a 20 minute video, and he describes it within that video about what I'm saying right now. So keep this in mind. So when I play that video again, I'll remind you. It's like when you buy something like XBI, you're buying companies that have duration risk. They need cheap loans, and they need those loans all the time because they burn through money so quickly. Because these biotech and pharmaceutical companies, they need high capital requirements, but they're so risky, that they don't have like the needed cash flow yet. They don't make a profit. They can't turn a profit very quickly. So a lot of times it's just like someone investing, someone putting in that risk. So that's the duration. So they are thinking like this company will be profitable maybe 10, 20 years out. Well, if you're competing with an instrument like a bond that pays you 3% constantly, right? Every quarter. Like they're giving you a 3% over the year, APY. So they're paying you at least a coupon, a part of that, 1/4 of that every quarter. Why don't I buy that bond instead of buying something like a stupid pharmaceutical stock that may or may not go anywhere? Because what's the chances of me buying HIMS, for example? HIMS, like I showed you HIMS, right? So that's a stock within this ETF. Well, it might not even be in that ETF, but I'm saying it's in the same sector. What's the chance of me buying a HIMS? Like, how did I know that Ozempic was going to go up and those big companies were going to have shortages and HIMS making a generic version of it would go up? That's a risk I'm taking. That's a high risk. I'd rather have no risk, have a lower rate of return, and can sleep at night buying a bond. So that's why when people want to take that higher risk duration, there's a shift in the market. So there has to be a shift in the tone of the market. So when the rich folks do not like investing in companies like this, you won't see XBI, that ETF, go up. All right. We're stuck. We've been stuck here since 2021 because 2021 was that over exuberance after COVID, right? And after that, it was like flatlining. It just flatlined here. And then what happened in November was that Jerome Powell said, no, zero interest rate days are done. We got to fight inflation. And once that happened, it just rolled over, kept rolling over. And it rolled over earlier than the large caps. So the large caps at that time in 2021 was still making highs. Okay, up here in December. It was still trying to make that high back in November. So people were fooled by that. But if you looked at XBI and other small caps, IWM, you would have seen like, hey, wait a minute. This is December. December, we dropped below this purple line. Hey, I see weakness. So like I said, if you just look at everything sector by sector, you'll see where people are putting their money, where their mouth is. And it always leads the next shoe to drop. You always will see it when the next shoe will drop. So it's not going to be a surprise. It's only a surprise is when the news starts talking about it, right? You just get like, oh my God, ASML, oh, the leaked earnings. Oh no, China tariffs, blah, blah, blah. And the stock market like tanks, right? For a little while and then recovers. So like I said, I think if you look at charts, you stay calm, you look at the risk and reward, you will understand where things are actually moving, because I don't need to listen to the news. I can actually try to scenario out the news. Like if I was going to say good news was going to happen today after in like Netflix, then I would expect it to go up here. If I see bad news, I would expect it to drop down back to this area, right? And that's it. That's all I got to do. But I didn't buy or sell there. I bought and sold down here because I was getting ready for the news to occur, see the price action happen, and then act accordingly after that. So that's what you got to do when you do charts. Anyway, we got about 1 hour till the market closes for the US session. And NVIDIA's pretty fast. NVIDIA will report right away their earnings. They won't take an hour or so. So you'll see right away, and you'll look at the after hours price action and you'll know. Anyhow, back to lithium. I think I was talking about lithium before. So let's look at one. Ooh. This got pumped yesterday. I have an article. And let me look at the other lithium stock. Ooh, man, like that. It's over. There's no more shorts to squeeze. So PLL, they had a little news about Ghana. They got a little effect from Elon, because Elon Musk is always rumored to be ready for Tesla to buy PLL. They want to buy the miner, but now it's all over. Now it's rolling over. Okay. That's why when I showed you the stage analysis, it's no longer looking good like uranium. Uranium still looks good. Now lithium is losing its luster. Let's put it that way. So I am going to watch for it to buy. So someone else, False was looking at LAAC. So this is, I think it's the same company as LAC, except this one is more, LAAC is more concentrated still in Argentina. So it's still holding up. The lithium player I usually play is SGML. You see this? So it's kind of calmed down a bit. It's still in early days. There's no rush to buy. Just let it cool off. But you can see it's making a nice base here. You see, since February of this year, 2024. So I am watching. I'm watching because if I get back in SGML at the right time, because when I was playing this, it was around here when it was back in the 13s, and I started selling it when it got into the 40s. Once I saw this last action, like you can draw a distribution chart here. Let me get the distribution chart for you guys. So SMCI was where I put, is my favorite little one. Yeah. See, I got this little chart here. Like you look at that, like it kind of looks similar, right? So I don't know. So SMCI is kind of in phase E, maybe. So maybe we got a little bit more downward motion to go. Let's look at the earnings date for SMCI. So SMCI follows Nvidia, okay? So yeah, it's all around Halloween. Yeah, this is very troublesome. I don't know why all these guys want to report in Halloween. It's just going to be a mess, a mess. So I copied that. So let's go back to SGML. So this is Sigma Lithium Corporation. Yeah, you see that? Yeah, you had this last pump. You see this last pump up here in September? This was this. This was this. That was that last point of supply. Once it started dropping again and it started cutting through these highs back in November, once you see this, you're just gonna run out. You just gotta run out because it's not gonna, because you made a lower high here and now you're dropping in and you're going into back into the zone of support, and I'm expecting it to get worse because, and this was it, right? Once it just fell through completely, it just collapsed. There's just no way. Yeah, you just, oh my God, look at that. Yeah, you just go, oh man, and then it just tries one more time and it makes another lower high, and after that it just goes through, right through, slices right through. Yeah, so we're here on the opposite end. Now we see this, so this might be accumulation, and I think lithium, uranium, a lot of energy stocks such as that are gonna do well. So look at utilities too. So I usually look at PCG is one I hold for long term. So this is a California Utilities, PCG, Pacific Gas and Energy, so PG&E. Yeah, I'm looking to see if it's going to break out anytime soon here. Because we're still halfway in this zone that was set in 2019 when they had the bankruptcy stuff. So once it breaks out here, it's going to 80. So you could buy utility stock and it's going from 20 to 80. And since utilities are the volatility is so low, options on this stock is probably very good idea. You know, you can get a leap option on it. And we can probably talk about leaps before the market closes. I could look it up, the definition, and you can see what it is. Another one that I mentioned was Hawaiian Electric, another bankruptcy type of issue here because of the Maui wildfires. So you see this, I bought around here when it got back up above 9.5-ish, and then I sold here, and I was making a joke back then to know, oh, you could short, you could short right here because at this point, like, yeah, you're so close to this area, you just might as well short. Yeah, because you're getting close to the 19, which was the open on this gap here, this gap from 32 to here. So this sets the stage, and you can look at this, right? You see that? Yeah. Once you see this reaction here, you see this resistance get tested. So once you get above and get into this zone, yeah, you probably would have been like short this sucker. But I was just making a joke. I was just saying, like, you could just day short, you could short it for a day, like from here to here would have been a good short. But I personally, I would never have thought like, oh yeah, I kept that short and just like held it. Like I wouldn't even have sold it for a profit. Like, oh, I mean cover. Sorry, you're not supposed to use that for shorting. When you short, you're borrowing shares, so you sold the shares and you're buying it back. Okay, so you have to say cover. All right, you have to say cover. So when you go down here, then you cover, right? You got back to this pink area, then you cover. Okay, but like you can't tell the future, man. You can't tell the future. All you got to say is like, this is a good place to short. It's just like when I did the Chinese, like market. I just said like, okay, I see this orange line, which is a very important line, and I see this, and I also saw, so I'll reiterate what I saw that day, that Monday, 2 weeks ago. So I saw this. This was Monday, October 7th. I saw a large cap ETF go up. But when I looked at the tech sector that day, it didn't go up as much. So the tech sector of China, so the Chinese NASDAQ, went up like 1.25% in US trading. Yet here I saw like, no. If you believe that demand in China is going up, why would the large cap Chinese stocks go up like this? Because those stocks are not just internet stocks. They also include like the banking, the like some government owned companies, which are zombie companies that never die. So it's hard for them to like go bankrupt. So when you see like an enthusiasm that's not around in Chinese tech stocks, which are less government controlled, because the only way the government controls Chinese Googles and Chinese Amazons is by making their CEOs disappear and shit like that. You know, that's the way they control them. They don't control their day-to-day operations. They just basically say like, okay, we let you have freedom for a while, and then when you get too uppity, you know, we just get the stick and start slapping you around like that. So that's how they control their tech companies. But when you see the US investors do like that, that means, you know, something stinks. Something stinks. And not only that, it happened right around the time when overnight the Chinese market went above that line, closed above that line. So that's why it stank. And that's the same thing as when you look at the semiconductor ETF. You do a Monday, you have very, very low news because there's no earnings reported on a Monday. That's Columbus Day because it's a bank holiday. No earnings were reported. And you pumped it up on rumors that NVIDIA was going to raise prices on GPUs right up to the top of this square, the rectangle. So that's why when you look at charts, this is way better because you can't predict anything for sure. Obviously, this might not have happened, but if I was shorting with the same logic I did for China, I would have done the same logic here because something stank. and you go, yeah, so that's why it's all about scenario planning and trying to do the risk reward analysis. You can't fully predict the future at any level that you could be perfect, but at least you can increase your odds of success. At least you're better than the guy who's just going like, oh man, like here, like, oh, let me short Nvidia. Let me short Nvidia. Let me short Nvidia. It's too expensive. It's too expensive. Bro, if you just shorted all the way from April and just kept shorting, because everybody was saying like the economy is going to collapse, Nvidia is just a bubble, this and that. If you can't time the top to any precision and you're shorting, because shorting requires you to get a loan to short shares, or you have options which require you to have at least some sort of decent timing. You just can't willy-nilly say like, okay, I can hold out. No, you can't. So the shorting game is a lot harder. Is a lot harder. And a lot of people can't be successful at both doing long and short. But at least I could tell you the signs where I think like here, this candle would have been a good sign. And then the 3 subsequent candles where it couldn't even go above 50% of this would have been suggesting to me, oh, we're close. We're probably at the top. And then once you saw this, the next candle going down like that, that's it, over. Every time you saw a green candle, you've been like, oh, you go down and you go back up, short. You go down and you go back up, short. And then by the time you got here, where he got back to these major regions that were set long ago in December of 2023 and January 2024, you would have been like me and been like, oh, okay, I'm in this zone, I'll buy. So that's it. You just have no emotions. You just go by the price and you just go by liquidity. That's it. And later on, we'll discuss about the ICT method, which is what CKJ3 uses, and I like it from what I've seen so far. I'm not experienced enough to teach it. That's the problem. So you're gonna have to wait a while for me to bring that up. I'm just gonna teach the stuff I partially know or I fully know, and from there we just build. We just build together. That's it. Because you see now that if you work as a team, all this, and you can gather all this knowledge and distill it correctly, this is where you're gonna get real edge. So maybe I should talk about that. You guys need to know about edge. You don't get edge if you know something that everyone else knows. If everyone's trading the same way, you don't have an edge, even if you're right, because everyone else is doing the same exact thing you are. The way you get edge is if you're doing something everyone else does not know, are stupid, ignorant, like they're running on emotions. That's where the edge is coming from. This is where you're going to get it right here. Yeah, this is already on the channel playlist. All of this stuff is already, Portia already took care of it, Momo. So everything's there. And once we get more active, like in November, it's going to get crazy. It's going to get crazy. You have to work real fast because I'm not going to handhold anymore. Because right now, yeah, I'm just hand-holding, right? I'm just hand-holding. Yeah. Anyhow. We still got less than 45 minutes till it's closing time. So yeah, let's see what Netflix gives us in about an hour or so. I think they'll report 15 minutes after. They're pretty quick. They're pretty quick about it. So let me find an article about edge. Yeah, I wanted to read a few articles today, but I think it's a good time to just talk about the overall philosophy. Yeah, you need to know the overall philosophy of things. And that's what Trading in the Zone, that book, is all about, right? It's just a philosophical exercise. Oh yeah, I had something to talk about United Airlines. Man, I had some articles about that too. Shoot. Let me see. I don't know. It's kind of stale news though, because United Airlines. But I found the reaction very interesting for United Airlines. So let me just do Edge first, then I'll talk about this. Yeah, I always use Investopedia. I mean, I know it's basic bitch stuff, but the way they present things is very good. Let's put it that way. So yeah, any good blue chip stocks? Yes, GE. But it's kind of too late for GE. I love GE. And the other one is, Eli Lilly, Ozempic, those are the ones I like to play, but it's kind of too late. We got to find new blue chip stocks, Garion. And that's why I talked about Boeing last time and Intel. So Boeing's got a ton of bad news. Intel's got a ton of bad news. We got new blue chip stocks to get in early, and they are trash. And I hope and I pray that we get more bad news. So Intel will release earnings around Halloween, and I think Boeing is next week on Wednesday. So if we get some nice price action where they just dump even more, yes, it is the time. It is the time. And I'll show you like two blue chip stocks here, since you reminded me, that were trash. At one point, they were talked about as garbage, complete trash. So let me do IBM. Oh, IBM. Oh, people talk so much trash about it, right? IBM never went anywhere. Oh man, it's a dinosaur. It's out of date. Yes, of course. But when a stock has nowhere to go but up. So let's look at 2008. You see this range? So it only hit a high in 2013. Look at IBM. Look at IBM. It's like, oh man, it's at the bottom of the range. It's never gonna go nowhere. It's just trash. It can't compete. Yeah, I mean this 2008 resistance is probably it's the same resistance as this .com high. You see, once we had the .com high, oh man, I don't think you guys realize how fun the .com days were in the 90s. Oh man, everyone was so retarded. This was before the internet trading. Like all these boomers were like buying any stock with .com on it, any stock, and so like they were probably calling their broker every day, going like, buy more shares, and it just kept blowing. Oh, but you see, from that point on, from the .com. Yeah, thanks, Lolo. Thanks, Lolo. Yes. I try. Yeah. So you got this range. You got this upper range now that was set. And obviously, you compare it to Microsoft. Look at Microsoft's chart. Beautiful chart. And you look at IBM as like, IBM, what trash. What garbage. But if you believed in IBM, at least since last year, that's a 100% gain. Because it was at the bottom of this range, hanging out, doing nothing. And we popped. Finally, IBM is turning around. This ship is actually turning around. Is this range the precursor to a much higher move up? I don't know yet, but it could be. IBM could continue up. We shall see. Another one. So I would say GE. GE is now 3 companies. Oh man. Finally, we broke the 2016 high. If you bought it here in 2022, August 2022, 400% gain. GE. Because the reason is GE completed their turnaround. So they broke into 3 companies. GE, which does the aerospace division. GEV, nuclear. So we talked about nuclear energy today. Hey guys, GEV might still be good. I don't know. Just wait. Don't buy this chart. This is kind of crazy. And then GE Healthcare. So it's 3 companies now. So these guys do the MRI, CT scanner machine. So actually, this is probably taught in business schools at this point, how to successfully break up a large company into successful little companies. Like I think that's what's going to happen to Intel. That's probably in its future. Boeing, I'm not sure. I think that's kind of hard to break that up successfully. I mean, unless the passenger business is broken away from the military, and then the military will kind of break off into the space. So they'll make like a SpaceX version of Boeing. That might be more efficient, actually. Now that I come to think of it, it might be better to break Boeing into 3 companies like GE was. Yeah, I don't know. But like I said, we got time. There's also news on Intel. It reminded me because I've heard rumors. Qualcomm wanted to buy Intel, and now they're waiting to make their offer after elections. Very strange. Why would they want to wait? Is their offer contingent on who wins? The Congress and the presidency? That is interesting news to me. So let me find that one. So good thing you brought up blue chips, Gary. Yes, I remember that was one of the things I wanted to talk about, but I didn't know I was going to talk about this stream. But let's do it anyway, since we've got about 35 minutes until the market closes. There really isn't anything to say. So this is rumor. This is a rumor. This is not validated by anything. So I'll put the link for Porsche in the back. Article on Intel and Qualcomm. So Qualcomm is a big chip. They make the Snapdragons chipset, which is on most of the non-Samsung Android phones. So if you're on Android, you're basically using a Snapdragon. Apple used to use some of their chips, but they stopped. Apple does not like to be beholden to any supplier down the chain. They like to control most of their pricing. So that's a. But Qualcomm is a big company. For them to say that they're willing to buy Intel, which is very large company, for even as big as Qualcomm is, they're not as big to say like, yeah, I'm gonna offer a merger deal with you. That's pretty crazy. They really have to think hard about like if that's really going to be a successful merger in the end. So sources claim Qualcomm delaying Intel purchase offer until after U.S. presidential election. Qualcomm wants things to settle down first before making a decision. Okay. So sources familiar with the matter have told Bloomberg that Qualcomm is waiting for the results of the U.S. presidential election on November 5th before deciding on making a move on Intel, with some even saying that the company won't move until the new U.S. president has been inaugurated in January 2025. Wow, they are so concerned. Like they, what are they thinking? Like Qualcomm thinks another Jan 6 type event would happen. Like, that, I don't know. This rumor seems kind of funny to me. Maybe this is just come on. No way. People familiar with the matter told Bloomberg that the chip maker is considering the geopolitical climate after the election, especially as it wants to gauge the antitrust policies of the new administration, as well as how America's relationship with China would be affected by the new administration. Okay. So I think, yeah, that's about it. I mean, I don't know. This Bloomberg. Let me try to find if I can get the direct Bloomberg article this is referring to, if someone archived it already. Someone should have. So I don't need to go through a paywall. Okay. So let me see if there's more information on it. But that's pretty interesting, I think. I think that's something to consider, that someone is willing to buy Intel, no matter how big it is. Intel is quite large. I don't understand why you would willingly get into the mess of being a... So my Chinese shorts are still up. I don't know. I'm taking a risk by holding it overnight. Well, unless you buy it from Robinhood, then you can sell overnight these shares of Yang. So that. So like I told you, that's kind of why, yeah, having Robinhood can be advantageous, because you can buy those leverage and inverse ETFs and trade them overnight. So you don't need to learn about futures or anything complex. And like I said, China, I don't think you can get Hang Seng futures on the U.S. Exchanges. So unless you're married to someone in Hong Kong or something like that, yeah, like I told you, just get Robinhood. If you're a degenerate gambler, like, you should have Robinhood as an option. Like, don't trust Robinhood completely, right? But like, you have an option at least to trade it. Anyhow, okay, I think I found the archived article. Let's go to it. So this is the Bloomberg article they referenced. Anything new here that the other article did not summarize? Okay, right here. So this paragraph I'm going to start. a combination of Qualcomm and Intel, whose products are key to the digital framework supporting everyday life, from smartphones to electric vehicles, would almost certainly draw intense scrutiny from antitrust regulators in the US and around the world. That includes China, a key market for both Qualcomm and Intel. Actually, that's very true. China can block a merger as well because we made so many agreements with international countries that a lot of these companies, they still need approval from the EU and China. Yeah, so making a merger isn't a done deal just because you got it in the US. So Qualcomm made a preliminary approach to Intel on a possible takeover of its struggling rival in September. In the same month, the company made informal inquiries with antitrust regulators in China to gauge their stance on any potential deal. Some of the people said Qualcomm hasn't received any feedback from Chinese authorities, which are waiting to see if the company actually makes a formal bid, they said. Intel is at the heart of the US government's plan for a homegrown chip making renaissance, making the political backing for any deal crucial. The Biden administration has consistently framed the importance of its chip making policy in national security terms. Intel is in line to get the biggest allocation of funding under the 2022 Chips and Science Act if it goes ahead with all of its factory building plans. Qualcomm has been speaking with US regulators and believes an all American combination could allay any concerns. People familiar with the matter have previously said making a bid after election may bring other advantages for Qualcomm. Intel will report third quarter earnings later this month. If that follows the pattern of the disappointing announcement of 3 months ago and the impact it had on the potential target's stock price, it could make a deal considerably less expensive for Qualcomm. This time around, analysts are predicting another net loss in excess of $1 billion for Intel. Now, if everyone's thinking oh, well, stocks are going to crash, it might not actually crash. But hey, we got Google, you got Microsoft, you got Tesla, you got everything, and we got Netflix in 45 minutes. So we'll see. And once that hits, if the market starts tanking, yeah, Qualcomm can get that thing real cheap. Real cheap. So that's this article here, Bloomberg doing the same article. So that's the source, okay? I'll put it in the back chat. Right there. All right. Anyway, let's see. That's a detour. Let's go back to Trading Edge. So I was talking about Trading Edge. How do you get your trading edge? So I've read a little bit of this article earlier, probably yesterday. I think these first few paragraphs are pretty basic, bitch. Pretty lame, actually. A trading edge is a technique, observation, or approach that creates a cash advantage over other market players. It doesn't have to be elaborate to fulfill its purpose. Anything that adds a few points to the winning side of an equation builds an edge that lasts a lifetime. Oh man, that is ridiculous. Getting a trading edge is not something that you just find and then you just stop there and it's going to work forever. Last a lifetime? Are you kidding me? The market is dynamic. It is not a static entity. This is why people find it hard to make consistent gains over time. The first step, you got to have the right mindset, which is why I recommended trading in the zone. Second step, you got to have at least the basic techniques to understand market cycles. That's the second step. And I have to repeat that several times because markets move in patterns that are fractal and they have a cycle to them. And if you align the cycles correctly, you can at least estimate when to buy, when to sell at the appropriate points. And it's not going to be perfect, but at least you can find it. So Jay Rillo says, like, I'm currently building a dividend-only portfolio, but still want to invest in options with less risk. Would you mind? So I don't know options, Jay Rillo. You got to talk to someone else. But Dennison, the way he trades options is he just scalps. So he looks for quick trades to do during the day, and he gets in and he gets out. That's it. So his thing is to only focus on the SPY options, SPY. If you do SPX, you know, that's going to be more aggressive, SPX options. And then we have CKJ3, who does futures. So he has the advantage of trading 23 hours a day, 5 days a week. So that's a different thing. But if you want to invest in options with less risk and you just want to do that, that's why I was talking about leaps. LEAPS. And okay, I can bring up an Investopedia article on leaps, and you should look them up. It's like basically long dated options, so that you don't have to worry about the gamma, the decay, and all that other, the Greeks, essentially the Greeks. So you don't want to, if you want to do long-term trading, this is what Nancy Pelosi does. Like, this is a way to get leverage. Like, if you let's say I believed in Palantir, right? Because I bought Palantir, I bought Axon, but if I really believed in it and I wanted leverage, one way is to get a margin account and just buy those shares with, on money I don't have. I'm getting a loan, so I have a margin account and I buy it. That's one way. But then you have to know that you are paying every month the interest, right, to maintain that margin account. And there's a danger. Like, let's say your account holds some risky stocks in it, and all of a sudden those risky stocks or the S&P, like, even if you're not doing risky, let's say the S&P just dropped 10% one day for who knows what, and then all of a sudden you get a margin call. So later that afternoon you get a phone call from your broker saying you better liquidate your shit. Oh, so that's the problem with that, because then you are beholden on the terms and agreement of the margin account. The other way is to use leaps. So you buy options with using less money, okay? But you have to pay a higher premium, because since it's long dated, you are buying options that, like, can last so long that potentially they'll get into profit, or they're already in profit at the money. And so then, yes, you will have to pay a higher premium, but still, maybe that's more of a better play than using margin. I'm not sure. I never looked at the risk reward of like saying, like, okay, if I use a margin account, what's my risk here of getting a margin call versus the risk of having a leap like collapse on me. Like, I don't know. I didn't do the math on it. Like, you gotta have to do that research. But yes, those are the two ways to do it. Because essentially you just want to do the same thing you're doing now with less risky stocks, but you want to get the leverage, then that's what you would do. Yes. To get the dividend profit, the problem is most people don't have a lot of money to make dividends worthwhile. So that's kind of the thing. So I just focus on price right now. But yes, I did discuss about, like, MORT, MORT, you get a 10% dividend, and then you look at the bond ETFs. So if you don't actually need to play bonds, you can get that, and you go like, okay, I got the bond ETFs. That's how I do it. Okay, yes. Let me continue on this article. Trading edge is a technique observation approach that creates a cash advantage over other market players. Yeah, I already read that. Okay, blah, 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 blah. Don't get frustrated until you find one yet. The majority of traders don't. Yeah. See, yeah, this is really, really a basic definition. Traders often use trading strategies without an edge, without realizing it, resulting in loss. Yeah, no crap. There are different type of edges to include temporal edges, capitalize on market cycles and trends. Yes. but have to be adapted to trading changing conditions. Yes. Creating a lasting edge entails customizing strategies with additional rules, cross verification, opportunistic management to avoid following the emotions of others. So let's continue on. So let's see this. Try to remember where you learned those specific concepts, whether from a book, website, or another trader. Okay. Through self-reflection, most traders will quickly realize they become lemmings, opening positions and managing risk using the same strategies as the majority of market players. This is important. A lot of times when you see people make a book, so they publish a book talking about their strategies. Once you see it published in a book, it's over. That strategy stops working. Because this is why. If everyone is copying that strategy, it stops working. Okay? So that's why in this channel, I am giving you every little tidbit I see. I think the edge will come when you combine many facets of knowledge into one, yourself, and do it. Because once we do that, I have to quickly stop talking about it. So once I introduce it in this channel publicly, and I start seeing that I can outperform the S&P 500 at least 5% over time, I'm going to stop talking about it. That because once this gets too popular, if this channel gets so many views on this stuff, it's over. It's over. So this is not what we want. So we want to, like, okay, I give you the seeds. You do it. You do the work, right? I try to make you guys look at what I'm trying to build here. And then once that happens, that's it. I no longer talk about it. Because we don't want it to get too popular. All right. This is what we got to keep it a secret. You got to keep it a trade secret. Firstly, you're competing with all those people for the same pot of gold. Secondly, crowds attract unwanted attention from other traders who notice the liquidity pool and execute predatory strategies to shake out weak hands. Yes. That is a problem. This is why algo trading is something that I think John was saying he had someone to talk about algorithm trading. That might be a bad thing because, like, if someone tries to talk about it openly like that, yeah, someone will start attacking that approach. If it's secret, anyway, if it's something basic, then yeah, it probably doesn't matter. The sheer number of participants acting in the same way eliminates the edge that made those strategies work in the first place. But that doesn't mean you need to abandon the trading or technical analysis skills you've taken so long to learn and master. So true. Well, markets change all the time, creating and destroying trading edges that tap into the complexities of the current cycle. The trick with these temporal changes is to work with them aggressively until the crowd shows up and then back off, utilizing them only when other folks are leaning the wrong way. Oh, really? Buy the dip strategies, which were very popular at the turn of the millennium and after the 2008 crash, are classic temporal edges that failed miserably in more challenging market conditions. Yes, I know. Regulations and technology also give way to temporal edges with the rise of high-frequency trading. As a strong example, prior generations enjoyed similar edges with bullet trading and level 2 scalping. Level 2. Man, level 2, I haven't heard that in a while because people are using level 3 now. Yeah, level 2 ain't good enough. You got to pay a subscription, get level 3 like tape data. You got to get the order book. See, so what I'm trying to teach you guys, things that are free, that don't require you to pay money. The only issue is that all the stuff I talk about isn't put together in one framework yet. But I think you guys, can do it. But once we start doing that, eventually you got to keep it a secret. Because once it's completed, once the project's completed, it's like you just keep it to yourselves, guys. So whoever's in this group right now and want to learn this stuff, once we complete the project, we're done. We're not talking about it no more, because we got to keep that thing, this edge, running for at least 10 years. Okay? Because eventually it stops working, because someone will find it out too. So yes, that's my goal. I don't know if I can do it. I'm happy not having too much of an edge. My edge for me, because I already have that capital, is to say, hey, I just need to beat the idiots, because there's so many idiots. Like on Monday, Columbus Day, Indigenous Appreciation Day, Italian lasagna appreciation day, whatever it was. Like, they got fooled. They jumped in. They probably bought. I got out. And then they crashed the market the next day. And it's just like, because I keep seeing the same old rope-de-dope, I don't need to have that edge. Right? I don't need to have that. I don't need to go against JP Morgan. Let's just put it that way. Because there's so many idiots that just fall for that kind of rope-a-dope, bop, Barnum and Bailey, whatever, Carney level tricks. I don't think you need to make something advanced, but I am giving you the seeds for you to, at least, because I don't know what's going to happen later on. And I think if I give you those tools right now, because I'm just lazy to synthesize it myself and try to create it. Yeah, I think Momo's interested, because we are at the early stages of psychoanalysis, advanced psychoanalysis, because I was showing you the work done by that German dude in that video last week. That's the future, man. That is the future. I see it. And so I'm a part of that. So I'll put that link up, so you can guys go to that YouTube video channel. So the Foundation of the Study of Cycles. Go there. Go look at their YouTube videos. Study it. So there was the old traditional boomer ways, and now we're going into the Gen X, millennial, and later on, some of you guys, Zoomers, you'll take it to that next level. You'll really take all this stuff, I'm telling you, to that next level. It's going to be amazing, I think. So later tonight, I will show some of that. So oh man, we're not at close yet. We still got 12 minutes till to close. I really want to see what Netflix is going to do. This is really what I want to show. So right now, this is it. But yeah, I can show some of that again while we wait. But for now, yes, let's look at, the QQQ is going back down, so it's lost all its gains for the day. Yes, same thing with the semiconductors. So it popped, now it's back to that bottom range. So I have two charts of that. Yeah, we're still there. We're still stuck. So no, yeah, we still need Netflix. But yeah, in any case, I think you really got to see some cycle. So let me show you one of their recent videos. It might be too dry, but I got time to kill.
Hello again, everybody. It is Tuesday, October 15th, and I am Dr. Richard Smith, chairman of the Foundation for the Study of Cycles, and we're back with Cycles TV. Man, is Cycles TV killing it or what? 3 shows a week now. Know y'all are loving it. And we are a not-for-profit foundation, so love your support so we can continue to do what we do. So This week, of course, we'll take a quick look at what we talked about last week, and then wanted to dig into Bitcoin a little bit because I just feel like things are kind of setting up for maybe the next leg up in Bitcoin. Of course, having a setup, as our fellow board member Jake Bernstein always reminds us, is not a successful trade. You need setup, you need a trigger, you need follow through, all those things. And this is trading market cycles. So we're not here just, we are learning how to do cycles, but we're also here to understand trading and how to use cycles in trading. So let's jump in and take a look at copper and what we were looking at last week. And then we'll get into Bitcoin. And then I'm going to give you a little update on what's going on with my new program, RiskSmith, which I've been showing you kind of how I do things behind the scenes. And I want to start to show you what it's going to look like as it's beginning to come together. All right. So good to be with everybody. Hello again. Thanks for saying hello. And let's see. Now I've got to share my screen. I'll do it. Yeah, there we go. Okay. So, all right. We're going to start here with taking a look back at what we were looking at in copper last week. And we were noting that things were on the bearish side for copper on the longer term cycles, but there were some short term bullish cycles on the 30-minute and 1 hour, and we'll take a look at those. But the trends overall in the daily and the 2-hour cycles were pretty bearish. So we said, if you want to try to get a little pop to the upside on a 30-minute or a 60-minute bar, might be possible, or you could wait for those kind of bullish short-term cycles to pass and try to get realigned with the long-term cycles. So overall on the week, let me try zooming in here. I'll just do this. Okay. This was the daily cycles in copper. We were about here. So, some down, some up, some back down. Trading isn't easy, but continuing to look bearish on the dailies in copper. The 2-hour in copper that we looked at, also bearish. This bearish signal playing out pretty nicely. If you waited and got up short at after the 30-minute cycle topped, would have been about here. Would have had to live through this pushback, right? Again, this is trading market cycles, and we don't pretend that trading is easy or that, this is a silver bullet. But overall, the 2-hour cycle has worked pretty well here. We're crossing out now of the, we're down below the cyclic RSI. Let's see if come on, why aren't you working? I don't know. Okay. We're crossing down now out of the cyclic RSI and moving down nicely in copper.
Yeah, so I want to just say, this is what you got to watch. So if you believe in the gold miners, because copper is one of those metals that are extracted at the same time as gold. So whenever people mine gold, they'll get some copper off of it. So that's why silver, copper, gold, if I see three of them moving up together right now, only gold is moving up. Silver is still stuck. Copper is moving down right now. If I believe in the gold miners, we got to get a stronger move in copper, not just off of China's stimulus. So it might take some time. It might take some time. Based on that analysis right there, yes. It looks like it's not a good time for copper. So we got to wait a while. So be patient. So when you look at that GDX chart, let me show that chart again. Oh, I closed. I had to free up some memory. Sorry. Yeah, TradingView takes up memory too. So you got TradingView and Streamlabs running together. Yeah, all hell starts breaking loose if I don't close one from time to time. So let me see. GX. Yes. Yeah, we are pulling back right now. So we do not see any strength in copper. So that's why you see the gold miners still right back at resistance, GDX. And so copper right now still dropping from the initial pump from the stimulus. And gold is doing fine, but silver is still stuck. So if I don't see all three going up at once, no. I'm skeptical that this will go up. I'm optimistic, but skeptical that it can finally break out here successfully. I think we'll get a minor breakout, but we'll just get stuck again in a trading range. So we still have time for you guys that are. So my favorite silver miner is EXK right now, above resistance, EXK. So I bought it here. So, I traded a little bit from this area from 2 to 3.5. I didn't go too far. Then when it went back to 2.5, and then it started climbing back up to 3. So I bought in this area here. So in this zone. So now it's back up here. I'm hopeful, but there's no guarantee, right? That's why if you buy here, it's no good. That's why you gotta buy at the supports, man. It's because your risk reward is a lot better buying here, but it's always scary, right? You see these drops, drop. You're like, hell no, I'm not gonna buy there. But you got to know that. Look at that. This was a support level, like here, and then here it became resistance, and here it became support again. This line was something important. You had to take your chances. So, yeah, it sucks. A lot of times when you trade, you're doing stuff outside your comfort zone. That's why you got to read that book, Trading in the Zone. A lot of times it's just psychology. So much of it is psychology. So anyway, Newmont is the biggest gold miner stock to watch. It will have earnings. So NEM, that's the ticker symbol, next week on Wednesday. Okay, 23rd. So a lot of things will happen. We're going to keep track of them. That's probably what's going to decide how GDX moves. But if copper isn't going to do anything, silver isn't going to do anything, it's only gold, and then Newmont comes in with earnings and it's not as great as expected, yes, expect a pullback in gold. But if it doesn't drop below 2,600, so let me look at the gold futures right now. Gold, yes, 2,600 is still, yes, that's the right price. So spot gold, and yes, so watch that. If it can't hold there, then yeah, we have to have a more significant pullback. So I'm looking at semiconductors. Yes, everything is pulling back now into close as expected. So after the opening, 1 more minute till close, guys. So Netflix should be reporting soon. But in the meantime, I'll keep playing this video.
Miss Humanoid Road.
Oh no, that's the wrong video. My bad. I have so many videos up now. Yes, this is the right one.
Looking at some of the shorter term cycles, this was the hourly cycle that we were talking about. So we were right about here when we met last time. Got a little bit of bullishness, certainly not bearishness, and then got a nice move down, but again, some chop. And this is the 2-hour cycle kind of taking over here and continuing to move down. And it was similar with the 30-minute cycle. Got a little bit of upside here, and then not much more. So overall, I'd say it was mixed. Didn't really get a good pop. And overall on copper, the bearish bigger picture is starting to take over. If we jump over and look at the trends, this is where they were in copper last week when we talked. You know, kind of flatlined with the total score of 10.8. And if we look at where copper is today, things are continuing to roll over with a total score now of 8.73. So definitely continuing to see deterioration in copper. But look, these trends are still pretty darn bullish overall. 8.73 is a positive trend. So again, we're seeing this in a lot of markets right now, a lot of asset classes. You've got these, you know, been strong uptrends. They're not collapsing instantaneously just because the cycles might suggest that they might. These things tend to take time, but we definitely are seeing weakening, seeing similar pattern in equities, and continuing to see the weakening in copper. All right, so now let's talk about Bitcoin. So going through our usual big picture, right? Here is the commitment of traders, commercials in Bitcoin. Okay, nobody, I mean, maybe the miners, you could say, are producing Bitcoin, but overall, this is the biggest participants in the markets, probably the ETFs, etc., and pretty bullish, right? Positive on Bitcoin, as bullish as they've been back for 4 years or so. Maybe it's with the idea that Trump is going to be president. Trends have been heading his way over the past week. I think that's why we've gotten a little pop in Bitcoin, but the cycles have been setting up for this for a while now. I wish I had covered Bitcoin last week. I was thinking about it, but I said, they don't want to hear about Bitcoin in such a short time from the last time I covered it. But I really think things are setting up in a pretty interesting way. So smart money, as bullish as they've been on Bitcoin in the last 4 years. Small traders, not excessively bullish. Okay, 60 is the current reading, not excessively bearish, right? So some of this, you know, gain has probably been used up already, but not excessively bullish, right? We're not up here. What was this, like April of 24? We can look at that on the price chart. I'm guessing Bitcoin topped around then. Maybe that was when the ETFs came out. Probably was. And we've worked off a lot of that froth, and where sentiment from the small trader is fairly neutral. All right, October here for the month on Bitcoin. I mean, not a ton of seasonal history, right? We've got, what, 13 years of Bitcoin now. Overall, bullish seasonally in the month of October, one of the strongest months for Bitcoin on the calendar. And this is just a little picture of the 50-day simple moving average. Okay, nothing fancy. You really don't need super fancy indicators. It's more about a decent set of indicators with good risk management and good execution. So we can see Bitcoin is above its 50-day moving average. It's provided some nice support and moving up pretty nicely. So meanwhile, this trend here, I didn't draw a trend line, but you can see we've had, you know, lower highs and lower lows, right? So low, this high is lower than that one, this high is lower than that one, this high is lower than that one. But we are getting here where we're threatening to break above some recent highs here. And I think we just might do it. All right. And then looking at my trend indicators on Bitcoin, trends are all green. We have seen some deterioration in the trend over the past couple of weeks, okay? It's not as high as it's been. It was as high as about 11.5 or so. So we are seeing some deterioration in the trend. And we need to see this not deteriorate more. So this is a bit of a caution sign. All right. So moving on to the cycles in Bitcoin. The weekly cycle in Bitcoin, the long-term cycle, not that relevant to the trades that we're talking about. It's got the 180-week cycle, right? The 41-month cycle. We've only got, I don't know, 1, 2, 3 iterations of the cycle. And we've got some topping in that cycle. So caution from the weekly cycle. On the other hand, the daily cycle, this is the Bitcoin futures. I actually prefer the cash Bitcoin here, and we see very clearly the 80-day cycle, the number 1 cycle. Actually, it's the number 2 cycle, sorry. 4 times that is the number 1 cycle. But the 80-day cycle is plenty for us when we're looking at shorter term trades, swing trades in Bitcoin. So we've got a clear bottom in the cycle. We've got some momentum moving up, right? It'd be nice if this momentum were at a bottom like it was back here when he gave this cyclic RSI buy signal, but right now the cycle's bottomed and momentum is pointing up on the dailies. All right, moving down. This is the 4-hour cycle. You can see a nice cycle on here at 62. But that's the same cycle we've been following in Bitcoin for months now, which is the 120 on the 1 hour, on the 2-hour charts, sorry. So if we jump over here to the 2-hour cycles on Bitcoin, 120 minutes, we can see this 122 period cycle that we've been following, roughly, a 2-week cycle, has also bottomed. Here we were, last week we were around here. Got a strong bottom signal here and moving up nicely through this. And that was perfect. October 11th. Cycle bottoming, strong CRSI buy signal. No surprise, moving up nicely. So this is the cycle that I've been following in Bitcoin. What's interesting to me, sorry, that's actually the 260 cycle. My apologies. Dang. This is the cycle we've been following in Bitcoin. Very sorry about that. And you can see also that this cycle is topping right now, okay? And, wavering in the momentum here. But what I wanted to show you also was this other cycle that we were just looking at, this 260, okay? So when we look at that, we've got the bottom here. It is the number 1 cycle. It is pretty close to 2 times this 122. So if we combine these together, I think this gives us a chance to break out of the range we've been in, especially when we see these two kind of coming together. So the two.
So, all right. So you see that. That's the range we are trying to break out. And I think that gives you a flavor of what's possible with more advanced techniques in cycle analysis. And this is why, if you know the basics, which I'm trying to get you as far as I can through this month, then we can jump into those cycles where that combined with what you know now will give you that edge. Okay. So that's what we're looking for. We want an edge. Right now, Netflix, finally, the algorithms decide to figure out which way they wanted to go and decide up is the way to be. We are up 4% on Netflix earnings right now. How will that affect the NASDAQ and everything else going forward until next week? We shall see. It's going to be Friday options expirations for this month. So expect volatility tomorrow and Monday. If we do pump, then the next earnings coming up, which we'll see, I believe, Tesla on Wednesday is the first one. And that's what we got to worry about. I don't know what the other semiconductors, I know Texas Instruments won't be reporting. Let me see if On Semiconductor usually is one that reports early to semiconductor. I think I gotta use the stock charts. Yeah, I gotta use the stock charts. 27th, man, that's late too. So I don't know what's reporting Tuesday or Monday next week. That's gonna be important for semiconductors. It's really important that we know that. Yeah, if we don't get that. See, 5% now on Netflix, so we're up 5%. Let me show you the screen here. Yeah, that's the only major one we got right now. So it's going to be a tough earnings season. Yeah, 5%. Blah, 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 blah. Let me see. What tools do we have? Earnings calendar tool. So stock charts has an earnings calendar tool. Let's look at upcoming earnings. So let's see, Monday 2021. Let's see. A lot of regional banks. Yeah, let's see. Still up. Yeah, okay, so we can see what the earnings are. So you can use this tool. I'll put it in chat. Okay. So this is free. You don't need to have a subscription on stock charts. Go here, go to upcoming earnings, and you can see what's coming up. Let's see. Hey, we had JP Morgan calendar. No, that does nothing. Schwab, nothing. Blah blah blah. So that's what's today. Let's see. Now 2021 is, October 2021 is the. Yes, a lot of regional banks, smaller banks. So let's see. So before the market opens, I don't see anything in tech. Oh, Indo is kind of like a meme stock. Yeah. So you guys that play Indo, yeah, that's gonna have earnings after the close on Monday. Logitech is the only tech stock I see. They're not really important. You grow. Okay. Gardening. Kind of tangentially associated with weed. Like so independent growers, let's put it that way. But no. Nothing important there. More. Oh, GE, what we were talking about. So GE Aerospace reports before market open on Tuesday. Next week, the 22nd. General Motors, 22nd. But still, yeah. Lockheed, 22nd before the market opens. 3M, another blue chip before market opens Tuesday. Pulte Group, yes, this is a very good home builder. PHM, 22nd, is going to report. So let's see what's after market close. No, nothing. I don't see anything. Nope. No tech stocks that I see that are worthy of mention. Just more local banks. And so Texas Instruments will be the first one as usual. So Tuesday, Texas Instruments. And if we looked back at the first videos I posted, they were talking about Texas Instruments. So that's a direct opposite of NVIDIA. They do automotive chips, analog chips, everything that goes into the small stuff. Yeah, it could cause a problem with the SOXX, I suppose. So I guess that's the only one we gotta worry about. STX, the Seagate. Maybe not. Seagate pretty much still does hard disks. They don't do like the solid state drives as much, so they're really not a big leading indicator of anything. You got Humana before the market close, I guess, on the Wednesday. Boeing, yes, we talked about Boeing Wednesday before market opens. Oh, EDU, New Oriental Education and Technology Group. Yes, that's a teaching corporation. So if you're interested in gambling in Chinese stocks, that's one of them. GEV, so the nuclear division of GE that got spun off, will report on the Wednesday, 23rd, before market opens. Yes, we got, yeah, and a lot more of the home builders, I think. Some more home builders. AT&T, 23rd before market open. Yes. Oh, Angami. I think that's an African stock. ANGH. I think that's kind of a meme stock, actually, too. So I don't know. You guys want to gamble on Africa? That's one stock at least you can gamble on. So let's go back to see what Netflix, my bad, Netflix is doing. Oh, it's pulling back a little bit. Okay, it's not up at 5%. Now it's back down to 3.97. I think we got to wait for earnings call before we make a decision on what this is going to do tomorrow. No idea. Yeah, it's just algorithms going up and down with it now. Yeah, I think we gotta wait for Texas Instruments next week. That's the first thing before we hit the Tesla overdrive. Once you hit the Tesla overdrive, it's over. That's just really how it's going to be decided. Yeah, I don't see anything else. Nothing here for 23rd. So you'll see Tesla here on this list. 23rd after the close. Globe, Horizon. Oh, IBM will report on Wednesday after the close, yes. Mattel, okay. Toys. Casino, Las Vegas Sands. Oh, LRCX is okay. So Wednesday we got LRCX. LRCX is kind of like ASML. So yes, we gotta watch that. Yes, we gotta watch that. That's a big one then. We'll have to see if it agrees with everything else. But you still got Tesla. So Tesla with LRCX. So that's really where it's gonna be. Hard to say. Hard to say. I don't think we're gonna get any decision today with Netflix. Netflix isn't really boosting anything else right now. But yeah, it looks like Wednesday is the key day for you guys. We got LRCX and we got Tesla. I think those are the two I'm going to watch. And before that, you see some blue chips. You saw some GE, you saw some IBM. We'll see how those go. Oh, Teradyne's a good one. Teradyne is a good one. Yeah, let me see how that's going. I haven't seen that stock. I haven't paid attention to that stock in a while. TER, Teradyne. Yeah, it's doing okay. I think. Yeah, I don't know. Yeah, it's doing okay, not great. It's just kind of like going sideways since August 7th. Let's see. Yeah. Ooh, look back. Yeah, it hasn't done much, huh? For the past couple years. Okay. Yeah, maybe I'll keep that in mind to look at Teradyne. Maybe it'll change its mood. O'Reilly, yes, I talked about O'Reilly. Auto parts are very lucrative business. Very lucrative. So definitely check that out. I think. So let's look back at Netflix. Yeah, it's gonna waffle up and down for a while. So I think that's about it. I don't think I can do too much now about it. So there's nothing more to do until tomorrow. And I'm gonna put up the calendar. So you guys should look at China, Japan also releasing some data today. Oh, let me change the time zone to Eastern. I'll change it to Eastern for you guys. Yeah. Damn, it only changed it for took away all the US time zones for some reason. Okay. So inflation is 7:30 p.m. Eastern. You'll get the inflation for Japan. 10 p.m. Eastern, GDP, growth rate, industrial production, retail sales. So watch the Chinese markets overnight. See how it bleeds through. And tomorrow we'll just have building permits. And 2 a.m. is the UK's retail sales. But those are not probably important. And I could show you the U.S. retail sales. So U.S. Retail sales this morning has increased 0.4% month over month in September 2024, well above the 0.1% gain in August and beating market expectations of a 0.3% rise. Keep in mind that retail sales are not inflation adjusted. So some of this boost in retail sales is just because the prices have increased. It's not because a lot of people are buying. All right. But from a headline point of view, yeah, it looks good. Sales at miscellaneous stores, retailers recorded the biggest increase, 4%, followed by clothing, 1.5%, health and personal care stores, 1.1%, and food and beverages stores, 1%. Other increases were also seen for food services and drinking places, 1%, general merchandise stores, 0.5%, non-store retailers, 0.4%, sporting goods, hobby, musical instrument, and bookstores, 0.3%, and building material, garden equipment, supply dealers, 0.2%. In contrast, sales at electronics and appliance stores sank 3.3%, and other decreases were reported at gasoline stations, down 1.6%, and furniture stores, down 1.4%. Sales at auto dealers flattened. Meanwhile, sales excluding food services, auto dealers, building materials stores, and gasoline stations, which are used to calculate GDP, jumped 0.7%, the most in 3 months. All right, guys, that's about it. So that'll keep the stuff going. Got in on a stock today that went from but didn't bail soon enough. Oh, okay. What's up, Duale? Yeah, the most of the action happens during the opening hour, or the opening half hour, and then that's it. You're done. You got to leave. So if you're doing trading, that's what you got to do. If you're scalping, that's what you got to do. For me, I don't really care about those things too much. I'll do it from time to time, but it's not my primary way of making money. Yeah. So I'm going to keep holding my leftover thing. Oh, shit. News is down 28% after hours. Oh, look at that. Great. That is something. That stock is something, all right. Yeah, all right. Yeah, the penny shit. Yeah, all right. Welcome to the casino, boys. Yeah. Anyway, let's see what Donald Trump stock is doing. That's another meme stock I've been following. Oh, yeah. I mean, I think we've reached the limit of how many short sellers there are. Yeah, let me check the short sellers. All right, let's see how many shorts are left. All right, they got some short shares available. So they've been running out of shares to short since last week. So yeah, they've been out of shares quite a bit, huh? They've been running out. So the 15th and then the 16th, it ran out again. Well, they got some more people shorting now, so some people probably got out. So we still got some time here. Yeah. All right. So I'll be watching this one. Don't know. Maybe it drops back to 20. You buy it again right before elections, pump it up again. Who knows? It was up like $60. $60. Damn. Yeah, man. If you're gonna buy some penny stock like that, oh fucking hell! I'm like, what the f is this shit? Like, what is this? Like the okay, guys. I mean, oh my god. Yeah, like the real game, like you can't, man, you guys can't rely on that to make your capital too much. Like if you're gonna bet on stuff, yeah, you got to be like Dedison, because the S&P 500 like is always designed to go up. Like if you're just jumping from penny stock to penny stock, trying to game it like that, no, it's you might as well just learn options. Learn options, Go to Denison's Discord, learn the options. You're just basically gambling on S&P 500, and S&P 500 like is not volatile, and all you're doing is making it volatile by leveraging it, and that's the game. Because if you can do that, yeah, you can scalp like every day, almost every day, maybe every other week, maybe, right? And you could build your capital that way. Otherwise, you gotta find a 6-figure job like I did. Like that's what I did. Yeah, because it's really hard to build capital consistently that way. Like you gotta be. I mean, yeah, you're better off doing options on SPY. Yeah. But I will do the scanning stuff. I will do the scanning stuff. So here's Dennis's Discord. Go over there. Go see what's up. Because what you're gonna have to do is we're gonna have to use scanners to detect all sorts of stocks over the day, over the week, and you can automate it, and then you'll decide what to trade based off of that. Let me look at this stock charts. Yeah, Palantir. Yeah, for me, I'm just looking for this, right? I'm just looking for the big runs over many months. Like if I'm investing, I'm doing this. That's it. And then if I do like these are my two like favorite ones right now: Palantir and Exxon. Body cameras, drone technology, AI, stuff like that. Yeah, things like that. And if you use leaps, oh yeah, I forgot. We were going to discuss leaps. We got to talk about leaps. Yeah, let's talk about leaps a little bit.
Today on Stock Charts in Focus, I come there.
All right, before I show the article, let's go. Let's see this Netflix. What's it doing now? Man, Netflix, come on, give me Netflix. What's it doing? Yeah, it's still waffling, not doing anything. Let's look at leaps. Look at leaps. An option strategy for short-term investors and longer-term investors. Okay, thanks, Fidelity. Leap year has nothing to do with leaps, but it's never a bad time to learn about the potential benefits of long-term equity anticipation securities, commonly known as leaps. These long-dated options may come in handy for long-term investors and traders alike. In contrast to regular options with expire within 6 months or so, leaps are options with expirations as far out as 3 years. Because they have more time until expiration, leaps cost more than traditional options. That's why I said the longer you have until expiration, the greater the probability that the option can be in the money. And so this type of option is more expensive. There are a couple of other relevant and significant characteristics of leaps. If the underlying asset pays a dividend, the owner of a leaps call does not receive it. That's the bad part. So Jay Rillo, listen up. Also, leaps owners do not have voting rights. So why use it? Leaps behave in a similar manner to shorter term options, but with the added feature of longer time until expiration. The greater time until expiration can provide long-term investors with another tool that allows them to position their portfolio as they see fit, instead of buying a stock or other security outright. Here are the few strategic uses of leaps for long-term investors. Buying leaps calls allow you to benefit from a potential increase in a stock or index over the course of a few years. Assume you believe a stock will go up in price over the next couple of years. Instead of purchasing the stock outright, you might want to buy a 2-year leaps option. Here's why. Options can enhance returns. Leaps allow you to control a greater number of shares with a smaller amount of money. Okay? That's what's called leverage. Leverage. See? So Tropes only has 3 shares of Palantir. What if he just had 3 options contracts for the same price? That would be a lot more. So for you guys to have not a lot of money and you want to play it like I do, because I just play shares because I do have a lot of money, right? But you guys to have smaller amounts of capital, I think this is definitely something you got to look at. But I can't tell you what the risk reward is for options. I'm not that expert on it. But CKJ3 uses it. He says he likes using it for ETFs and things like that. So I think, what we got to do is that we have to incorporate a lot of the side techniques here, like leaps, to appeal to long-term investors that do not have a lot of money. Because some guy came here and said he only had $2,000. That's great for options. But let's say he doesn't want to be a trader like Dennison and scalp every day, and he still wants to be an investor. Well, this is a way for him to do this. You could have bought those shares back at $6, $7, $9 or whatever dollars it was. I forgot in Palantir, but because you get a limited amount of shares with a few K, you could take the risk of doing more, and this is one of those ways. Yes. So note that, as with regular option contracts, there is risk associated with employing options as a way to leverage up your returns. The potential loss of the trade may be reduced. Okay, here we go. The maximum potential loss of purchasing leaps is the cost of the option, whereas the maximum potential loss on purchased stock is that it could hypothetically go to zero. While it is important to recognize that the likelihood of leaps expiring worthless is more probable than a stock going zero, you may be able to put less capital at risk because options allow you to control a greater number of shares with a smaller amount of money. This is the key. Because we're using options for long-term duration, we're doing it for further out, the duration here. So that's the key, right? You are paying more for that duration because that premium is higher, right? We talked about this duration. You are renting out shares of a stock. You're paying higher at the beginning, but at least you're not buying the shares outright. This is why this gives you that leverage. You can use the contracts because one contract controls multiples of shares. One contract probably controls 100 Palantir shares. And if you get it at the right price, this is the question. Is it at the right price? Because option pricing is different. And that's why you got to bring John over here. He's going to talk about Black-Scholes equation, this and that. No, okay, we don't got time for that. But, this is something to look into for sure. So for you guys that want to do long-term investing, boom, this is it. This is the way to go. So we'll probably talk about this some other time. And I think I'd rather have someone with options experience to describe this further for you, because I definitely don't. So I don't want to talk about it beyond the basic level that you can see on this website. But yes, you can look at it yourself. They give you a little example. So look at that, decide what you want to do. I think this is perfect option. So let's look back at Netflix. Still about 4%. So we still got time to look at it. So I don't think anything will happen until next week. unless there's some weird shenanigans for options expirations tomorrow. We're almost at 3 hours. All right. Thank you very much. I will come back in later tonight to the early morning, and we'll discuss more on things. And remember, guys, to support the Halloween costume party, all girls only. Okay, donate to Porsche's Cash App. Put a message on there to show that yes, you are putting that money in specifically for that $1,500 pot. That's what we're looking for. Trying to raise up to $1,500. This is the ad. All right, guys. Man, and if you ladies win, how about this? Think about it. Keep that money and invest it in a Leap. Yeah, just think about that. Just put in an option. You might as well learn. You got some money. You got a few $100. Please send link. Will it be here? Yes, it will be here. Yes, it will be on this channel. Be the Kitties. I mean, yes, we yes. Do you have her email? Like her email scrolling right now. Let me get that. Yeah. Okay. Yeah. Email her. Okay, it's scrolling right there. I put it in chat for you. Be the Kitties. Yes. Get the email. We have the community link. Let me get the community link. Yeah, for you. All right, here you go. That's right. Here's the community link with all the details. And yes, email any questions to Portia. And I can link an image. Let me see. I have an image screenshot of that post. All right. Okay, got it. So I got a screenshot of that post here. Put in the chat. There you go. So you can just quickly get to the screenshot. No problemo. So yeah, let me present. So you can see where the screenshot. I put the screenshot in this link. Oh, Netflix. What is it doing? 3.8% right now. Okay. There you go. Here's a screenshot. See that? So I screenshot it for you. So there you go. This is the whole thing. I put it in that link in the chat. Good luck, everyone. We got at least 13 girls competing. 13 girls. Oh yes, it's gonna be crazy. I think it's gonna be really crazy. So please up your game, because I think people are really desperate for that money. Oh, 15 now? Oh my God. We got flow state going. All right, we got flow. Flow. We got all flow states like audience. It'll be like it'll double that pretty quickly. Or you gotta go, or you go to Raging Tomato. You go to her channel, start advertising. Oh my god. Oh man, actually, do we have Torsia, Gary? Do we have Torsia? Oh man, Torsia. Yeah, if Torsia comes. Oh man, gotta get. Damn, Prawns. This. Oh god. John talked to Prawn so we can get Torsia on here. You got Torsia, then you got thanks Daniel. Harambe for president. Yes, Harambe for president. Oh yeah. Anyhow, guys. please pay into the pot. Please pay to play. We only have like last I heard yesterday was 405. Maybe it's gotten higher. But for every few hundred that you donate, I'm sure John will add to the pot. I will add to the pot. Who's Torsia? You don't know who Torsia is? Torsia with two H's, I think. Come on. Don't be coy. Or 2 A's? 2 A's? Torsia. Well, like Princess is sweet on her, so I'm sure. Yeah, a lot of people are sweet on her. Yeah, this is her modeling contact info. So go ahead, you can inspect that on your own time. I put it in the chat. But yes, we will have it on October 31st, 9 p.m. Eastern. Is this person up? Yeah, she's not related to the. She's just tangential. She's kind of like within a Destiny / whatever sphere. I don't know, something like that. Whatever. Oh yeah, if you get Lauren De Laguna too, like if you get her, Lauren De Laguna, you get anybody else. I mean, I don't know. I don't know if they're gonna do that. I don't need money. I was born wealthy already. Well, thank you very much for that. But keep begging. I don't need money. Okay. All right. Whatever you say. Not everybody has a silver spoon, You got to get money somehow. Are you telling me everybody's got a silver spoon? I didn't get no silver spoon. I was like, what the fuck is this crap? I barely even got a copper spoon. Hell, I probably got lead, man. I got lead poisoning from my spoons. Did I even have a spoon? That's a good question itself. You don't know. Okay, Netflix still not doing nothing. So I don't think anything's gonna happen tonight. I don't think anything major, but we still got China. You still got Japan. Maybe that will do something. The inflation rate, maybe that will shock the yen dollar relationship, and that will shock the whole market. But we'll see. Okay, guys. I'll see you next time. Later tonight, late night. So maybe 10 or 11 p.m. Eastern. I'll update if I see anything interesting going on. Yeah, I'll try to do that. Otherwise, it'll just be something rescheduled until early morning yet tomorrow. All right, thank you very much. Please donate. I'm gonna keep repeating it. I got grift. Donate. Please donate. You see the scrolling banner, Portia J, Cash App. And if you want to use PayPal, her email's right there, portia@jghb.info. Okay? You see the scrolling banner. You got to do it. We want to have a fun time. It's in 2 weeks. Be there or be square. All right. I'll see you guys. Have a nice afternoon. Have a good night. Yes, that's right. It's the mentality. Correct. That is most wealth is from the mentality. That's how you preserve it. Yes, that is what we're trying to do on the John Galt channel. Okay, see you guys.